Hello friends, this is Rick with Hit and Run Candlesticks. This is Saturday, January 9th, 2021, and I've got a few charts worth pondering this weekend here. First, we're going to take a look at the market real quick, and then we're going to take a look at those charts. Hey, I do want to remind everyone, that we still have a Bullish W ebook training guide available on our social media side of Hit and Run Candlesticks. The links are below for Twitter, for Facebook, and LinkedIn. So if you'd like to pick that ebook up, free of charge, no one's asking for any kind of credit card or any money at all. But if you, like I say, want to run over to Twitter, Facebook, or LinkedIn, you can search for it there, and you'll see that Bullish W pattern book. It's one of my favorite chart patterns that's created by price action and candles. Anyway, if you want to download it, go do that. That will be available for this month. And next month, we'll be putting another one up as well. So if you have any questions, just let me know. You can always ask a question in, of course, YouTube here. You can always ask a question on Facebook or Twitter or LinkedIn or something. And also a reminder that every morning here we've been posting pre-market gappers on the social media side. And that seems like a lot of people like that. So we'll probably continue that until there's no interest in it. But right now there seems to be a lot of interest, so we're going to do it. So that's pre-market gappers posted just right before the market opens, about 15-20 minutes before the market opens each day. All right. So what a great week last week. Wow. Interesting week news-wise for sure. But as far as trading goes, a fantastic week. Fantastic. So yesterday, the market closed up. Market was a little slow for most of the day. A little bit, it was even questioning some folks whether we was going to hold on here or not. But we ended up just popping right up here at the end of the day and looking quite bullish. A couple of things I'm going to look for when I think about the market. Is it bullish? Is it bearish? What should I be doing? One, I'm going to look at the current candle, what it's doing. I'm also going to look at what the current candle is doing with the previous candle. I'm also going to consider which it's not shown here, the 3 EMA, where is it in relationship to the T-line? And then I'm going to consider where the T-line is in relationship to the Trendicator. That's Trendicator's the dots you see right there. So I'm going to take all that in account when I'm trying to make sense of what the market is doing. And as I look at this here, man, yesterday could have got pretty nasty, but the truth of it is we're still in a trend. We can have nasty days. This was what I would call a nasty day. But the truth of it is the trend never broke. So this was a good example of a day to not get crazy bearish. You know, you don't want to get all crazy, the world's coming to an end and everything, and get short because you have no follow through and the trend is still bullish. Look what happened the very next day, and now look where we are. So we want to be careful trying to rush into things until we see that actual trend change. FNGU, man, this thing is rocking. I still maintain as long as FNGU remains bullish, I think the overall market will remain bullish. I have not changed my mind on that, and I will continue to think that until that is no longer the truth. But right now, every time I think the market might be trying to turn a little bearish on us, I just come over here and look at this FNGU, and as long as this thing holds up, I think the market will eventually turn right back up. When I say eventually, I mean within a day or two. So what it's doing, it's keeping me out of short trades is what it is. And anyway, it's really saved my bacon the past year or so using it, and helping me determine the direction of the overall market. All right, let's take a look at some charts to ponder for this weekend. JD is one of them. JD. So JD may be setting up here. You know, I just realized that I haven't marked these up, so I'm going to do that real quick, and then I'm going to come back on the mic here. Okay, that didn't take me too long, and we're back. So let's take a look at JD here. JD with a $88, 15 cent, $88.10, somewhere in this area right here is what we'll be looking for a stop. We'll be looking for an entry in this area right in here. As far as a target goes, if you take a look at the weekly chart, you can see that we're making a nice bullish J hook breaking out of here. Just in case, let's make this a little bigger. There we go. Just in case you don't know what a J hook is, it's simply a chart that's rallied up, pulled back like that. You see how it might be making a J right now? And when we break out here, this starts the finishing of the J, that follow through. There's your J right there. So that's what a J hook is. It's just nothing more than a continuation pattern. So what we're looking for is price to rally up, find some resistance, or find some sellers. Price pulls back, finds buyers or support, and then it starts to curl back up. And when it breaks out, that starts our J hook. And that was on the weekly chart. The weekly chart's a little prettier than the daily chart. But I sure like this for a possible entry. So we'll be looking at this this next week here, JD. Another one that I'm going to be looking at is Zen, Z-E-N, Zendex. Zendesk. Zendesk has been up 3 nice bars, and you can see where we met a little resistance up here. Had a good opportunity for the sellers to knock it down, but the buyers came back in. Now what I'm looking for is a little bit of a rest after 3 positive bars. Looking for a little rest inside this area, this green box. That's our buy box. I'll be using somewhere around 142.70. If I say around because, I mean, if it's bought, if it's bought low 145.05ish, that works perfectly fine for a stop. But if I buy it up here higher, then I'm going to almost immediately have to raise that stop up just a little bit, because if I buy it up here, if I buy it up in, say, this area right here, say I buy it right there, okay? I really don't want this thing to come all the way down here for me to decide not to like it. This is a stock picker's market. It's been that way for a long time. So my idea is when I pick a stock, I expect it to go up. Now, I don't expect it to go up right away. It can certainly dance a little bit in here. That's okay. But I don't want it to turn back around and have some big test down here. It's okay to test partial, but not all the way down. If it does, then I have to consider maybe I didn't pick a good stock to trade. So watch that stop there. Piton, excuse me, Piton is setting up here. We talked about that weekly chart, J hook on that, what was it, JD. Take a look at the possible J hook setting up here on Piton. Here we move up, we make that high, and see how we come back down, and we start making that rounding bottom in here. We have a nice little, this is a Morningstar type chart pattern, not exactly a Morningstar. When we get up here and we get to the point where we can break out, then man, that's where that J hook, that really starts to look like that J hook continuation pattern. Here's what the weekly chart is looking like if anyone is interested. Nice little J hook setting up here, and you can actually see that it broke out. If we were to do this here, put that line right in there, see our rally up, here's our move back, there's our J hook, and now we're just resting consolidation. Piton looks really good, so I'm going to be shopping for that tomorrow or Monday, inside Monday, Tuesday, or Wednesday. I don't know for sure Monday's going to be the best day to buy. But I'll be shopping for it in this buy box area, and I'll be using 151.30-ish as a stop, depending on exactly where I buy it. PEIX may be setting up. It's been in a bit of a downtrend here. Here's your nice bullish uptrend. It's been in a bit of a downtrend. It got below the 50-period moving average, and it's pretty much hung below that for a while. And then it created this little bottom in here. Let me put that right there. Created this little tap of a bottom, and then we have a double bottom set up over here. And then you can see we've got this bullish Hiromi with follow through. The follow through actually closed over the 50-period moving average, and now we've just got a sideways move here setting up. If I was to take this and just move it over, we would have a possible pop out of the box coming up. Now, normally we like to see 4 candles in a pop out of the box, but let's not throw the baby out with the bathwater here. That's shaping up to be a pop out of the box. So what I would like to see is an entry inside the buy box here, a stop around that $6 mark, and then go ahead and pop right on out of there. When we start to pop out, some places we're going to look for some targets is we'll start with 740, and then we'll just go up from there on PEIX. So we'll put that on the watch list for sure, and we'll be eyeing that here this next week. Check out Lowe's. Lowe's I've got on the list here. Now, Lowe's has a couple of things good on it, and I think it has a couple of things bad on it. So we really need to be careful with this. And I'll be very cautious with this. Let's talk about the good first. We have a downtrend here. We have a low, and let's do this. You can see the uptrend the trend has changed. If this is the downtrend here, right there, you can see that trend has changed. We have a low, high, higher low. We made a higher high, and we have a higher low. And it looks like we're headed for a higher high with a pretty nice price, some pretty nice price action in here, and a good candle pattern with this bullish engulf, doji, and then a little bit of follow through. This is what we call a doji continuation pattern. Now, there is a bit that it needs to get through here, which I'm not overly concerned about that. Okay, that's the good. Okay, that's the good. Here's the bad. The bad is we've got a bit of resistance right here. Right there. Right in here. We've got a bit of resistance. So that's going to be the bad of this. Now, as long as I control my risk, knowing what I have going in and willing to risk it. So a buy in this area, even at the top of the box, I'm only going to risk about 1.85%. using 162.50 as a stop. What I'll do is monitor price as it moves up. As long as we don't get a big sell signal in here, I think I better paint that red. There we go. As long as I don't get a big sell signal in here, then we may be okay. But if we can't break through 171.45, if we can't break through there and prove the buyers have the strength to break through and hold, then this trade could absolutely die at that level right there. So we want to be a little bit careful in here if we're looking at that. Now, here's another thought that I may have. If I don't pick this up in this area, I'll just keep it on the watch list, and I will patiently wait until we actually break out, prove we can break out, do a little testing, and then wait till I see those buyers come in. At the end of the day, is it really going to matter if we pick up another 4% on this trade? So I'm going to keep this on the watch list. We may or may not buy it in here, but we'll certainly be looking for it on a breakout of that 171.45 area. Pins, PINS, may be setting up. That bullish J-hook pattern that we talked about here. See how we've come up? And now, nice little bottom here. right up in here. We start to get that breakout. Now you can see how that J hook looks, like this. So here we run up, and there's the J right there. So let's see, there we go. Pins may be setting up with a $68.90 stop. I'm looking for a pullback by inside the buy box. So I actually want it to come below the close of Friday. I want to get it, really want it to get down into here for a buy, and then start to move up here. Once we get through that breakout area up here, we're good to go to maybe look at that 80, 85, 90, and we're getting awfully close to that $100 mark. GE is setting up. Now, GE was actually on the watch list a few days ago, and it did a really good job here. Now it's pulling back and resting, maybe giving another entry after this move up. Nice little pullback here. Nice organized pullback, and now the bulls are coming back in. Nice little 3/8 trap setup. So inside the buy box, I'm looking for that entry. $11 for a stop. If we take a look at the weekly chart, you can see this great big old cup being formed, and first target up here will be around that $13 range. And then from there, once we break out of that, there's a ton of upside for GE to move. So we'll take this one step at a time and trade it by our rules. Cisco may be one to keep an eye on. Let's start with a weekly chart on Cisco. So Cisco is, depending on how you want to draw your trend line, you can make an argument that this is not necessarily a good trade here or not. You can certainly do that. In that case, if we don't like this, if we don't like the price action, we'll wait for a little higher price, a little more strength, prove it can actually break out. Right now, what I'm looking at is, let's get rid of this right here. Right now, what I'm looking at is simply to follow price, maintain my stop. Don't get excited if if we see a sell signal, step out of it. We can always step back in. Let's see, go back to the weekly here. Once we start moving up higher, I see the possibility of getting back up to that $57 level, and that's a $13 move on this. So back to that daily. Here we've rallied up. We've consolidated very well here, and then we've pulled back a couple of bars down, and now we've come back up like a scoop pattern. So what a scoop pattern is where we have a scoop. So let's make this scoop like that, and then here's the handle right there. There's the handle on this. So once we get this handle, that's at just simple horizontal consolidation flat trading, and then we've got the scoop in there like that. We start to break out here. That puts this in a nice position to move higher. So I'm looking for some Cisco, an entry in this area or on a breakout. I would not be afraid to buy a breakout up here. We're going to put that line right there. Wouldn't be afraid to buy that, but I may have to raise that stop if I buy too high on this. So 44.50 as a stop, and we've got about 2% risk going on in the buy box. Hey, before I get to the last one here, again, I want to remind everybody over there in Twitter and the Hit and Run Candlesticks, Hit and Run Candlesticks Twitter, Hit and Run Candlesticks Facebook, and in LinkedIn as well, we have an excellent bullish W pattern ebook that's yours. It's free. It's absolutely free. If you want to download it, take a look at it. Good explanation in it. It's a very well done ebook. If you want to check that out, just run over there to one of those three, either one. You don't have to go to all of them, just either one that you like, those social media outlets for Hit and Run Candlesticks, and just download that. Okay, the last one I'm looking here is BMY, Bristol Myers. So Bristol Myers has been playing around sideways here for the most part. take a look at that weekly chart. You can see it's just been fussing around sideways. Well, if you come over here and look at it, it looks to me, if we were to take this line, which it should be red, I don't know why it's blue, there we go. If you take this line, it kind of looks like there's been more activity below it than above it, right? And now all of a sudden, if we look at this, all of a sudden we've got some green activity, and other than a couple little peaks below it down here, but it seems like it's quickly recovering, we've got some bullish activity going on above that line. So under this line, I'm going to look at that and call it resistance. Over this line, I'm going to look at it and call it support. So as long as we can hold that support in there, then I might consider this for a trade. If we do something like that, you can see that if you want to draw the line, to here, everyone seems to draw lines a little bit differently, wherever you want to draw that. But I'm not worried about a trend line in here. I'm going to be following the price action. So as long as the price action stays bullish and it continues to rise, this might be a worthwhile chart for hit and run candlesticks in the Road to Wealth account. So we will keep an eye on this for a possible buy. Again, there's that weekly chart, and if we just, let's do this. Let's take that weekly chart right there. Right. Well, see, if we take it here, you can see it's already broken out. If we pull it up here, we're testing that breakout area. We've tested. Maybe one more time we get up there. So depending on where you want to put that line. All right. Hey, this is Rick with Hit and Run Candlesticks. Thank you so much for watching our weekend charts to ponder. I hope you find it educational, and I hope you find it very helpful. Please shout out to us what you think. Give us some ideas. If you think we need to make some changes, any input would be appreciated. You guys have a great weekend, and remember to be safe, okay? See you Monday.